Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning. Today is Tuesday, 7th of November. So before we start our usual Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, so over here, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, basically over here is that this is the three takeaway, or I'll say the three key gist of this daily dose of market insight is to recap of key highlights and events that took shape yesterday that potentially impact the broad-based asset classes, and as well as what are the events to look out for today, stretching all the way up towards the US session, and also as well as the early Asia session tomorrow. That means i.e. before our daily dose of market insight kickstarts at 11 a.m. Singapore time. And to round up, we will actually be sharing the short-term technical outlook on the broad-based asset classes. All right, so without further ado, let's get started. So basically, yesterday was pretty much of a quiet economic calendar. So we do not have a key economic release during the European session as well as the US session. So with that, right, let's take a quick look at the performance, the overnight performance on the broad-based asset classes. So we see a bit of a mixed picture on the FX market. Yes, the dollars, we call it weakness, kind of a subdued yesterday's session, where we start to see this sterling dollar, the sterling against the dollar being the weakest currency overnight, and as well as during today's Asia session, we see a drop on the Aussie dollar as well. But that actually came within our expectation. If we could actually recall yesterday's bearish bias on the Aussie dollar as well as the sterling dollar. So on the broad-based US stock indices over here is that we see a pretty much mixed picture, but however, it seems to us that right now we are pretty much due for a corrective, at least a corrective pullback after the last two sessions. I would say 2 sessions of very steep up move, ex-post FOMC and heading towards last Friday lackluster non-farm payroll data and ISM services PMI for October. So let me now take a look at the S&P 500. We call it a carpet. So you all should actually understand what do I mean by this. So if you look at the carpet, means the carpet performance of the S&P 500 component stocks, what we could see over here is that very lackluster performance overall. Why? Because only the 7 key mega cap stocks that are actually holding the fort: Microsoft, Apple, Nvidia. We have Google, Meta, Amazon, Tesla slightly down, negative 0.31%. And the rest of the S&P 500 component are not so rosy. So if we start to take a look at the broad index performance as of yesterday, the weakest was the Russell 2000. You could see here negative 1.29%, followed by the Dow Jones Industrial Average, almost unchanged at positive 0.1%. The strong performer, we are saying, will be the Nasdaq 100, positive 0.34%. So that actually kind of being supported by the 7 mega cap stocks that I highlighted earlier on the S&P 500 heat map. Then the SPX is actually up 0.18%. So what we could see over here is that potentially we could see at least the start of a minor pullback trajectory for the benchmark US stock indices. But for sure, one of the weakest yesterday was the German 30 index, where it actually resided or negatively reacted off right exactly at the resistance that we highlighted in our short-term technical outlook for yesterday. Okay, so with that, right, let's take a look at very quickly. This is how's the dollar performance yesterday. So what we could see over here is that the dollar weakness was kind of pretty much still pronounced over here. But however, if you look at the 5-day rolling performance, what we could see yesterday is that the dollar starts to actually inch back up against the sterling and against the Japanese yen as well. And later I'll share with you the short-term technical outlook of the Japanese yen. If you recall yesterday's view, we do expect a kind of a pullback after last Friday's steep move, which actually did at this point in time. And now going forward, what is the key levels to look out for today? So that will be pretty much covered towards the end in our short-term technical outlook. So without further ado, let's look at some of the key data to look out for today. So if I look at the economic calendar right now for today, what we could see over here is, let me see, I think it should be just released the balance of trade data for China. Okay, so over here, this is the balance trade data for China. So overall, all in all, it seems to us that yeah, it's pretty much exports is still pretty bad. So export came in. Okay, let me expand my screen so that you all could see much easier. 150, yeah, okay, better. Okay, so right now, export year on year came in worse than expectation, negative 6.4% year on year. Also tumbled down to below negative 6.2% that was registered in September, way below expectation of negative 3.3%. So what does it mean? It tells us that, i.e., the global economy, talk about external demand now, the global economy is still in pretty much soft shape, pretty much weakness going forward. That's why I explained of the what you call it, people are kind of lackluster in buying China export, and also potentially is this ongoing trade war, or I'll say tech war between US and China, where there's a potentially US itself is trying to actually chop off external what you call it, people, countries that is within the sphere of US to actually source for less product from China. So that could actually explain the negative 6.4% year-on-year decline. So if you look at the trend, right, it's pretty much in a bad shape. All right, so it's close to 1, 2, 3, 4, 5, 6, 6 consecutive months of year-on-year decline. But one thing for sure over here is the imports. So you start to see imports starts to turn around. That means China starts to being buying goods from the rest of the world. Very interestingly, so the imports over here, right, is actually positive at 3% year-on-year, away from negative 4.8% year-on-year that was printed in the consensus, and way above negative 6.2% in the month of September. So you look at the trend, right? This could be the very first month in terms of year-on-year growth that China has started to register a positive flip up. Okay, after 1, 2, 3, 4, 5, 6, 7 consecutive months of year-on-year decline for imports. So yeah, this is only a potential one data. So that means we need to see a trend, right? To prevent what we see earlier in February. So this was during the reopening, the early part of the year reopening, where China starts to actually consume more. All right, so that's why imports starts to grow up. So for sure, the over here is that potentially we could start to see a bit of what I call targeted physical stimulus that's being working into the general China economy that lead to this uptick in demand from the rest of the world in terms of goods and services. But definitely it's just only a month of data. We need to see at least 2 consecutive months, or better still 3 consecutive months of uptick in we call it positive import growth. So what does it mean? Potentially raw materials, because China itself, do not forget, is one of the major consumer of raw materials in terms of iron ore, oil as well, indirectly. So potentially it could be it could lead to what I call kind of a demand in this sort of commodities, primarily driven by the fact that that could be due to what I call more targeted stimulus measures to actually arrest or negate the ongoing liquidity crunch in the property development sector in China. So nevertheless, later at 11:30 p.m., we do have the RBA interest rate decision. So later I'll share with you the chart of the Aussie dollar. So it seems to me that more or less the recent up move in the Aussie dollar has started to price in this 25 basis point increase on the official cash rate to bring it to 4.35%. Like I explained earlier yesterday, is due to the fact of an uptick in inflationary pressure in Australia. But bear in mind over here is that we need to actually see how balanced will it be during the statement, the release of the RBA statement after the decision. And do not forget, it's now being chaired by a new governor. So with that, right, because in the previously they should do concern about number one, the external economy, which is still weak, especially primarily up from China. So I think they do not also want to actually be sound too hawkish, rather portraying a more of a balanced approach going forward. Okay, so with that, right, these are the key thing to look out for later in half an hour time, but later we'll share with you the outlook of the Aussie dollar for sure. Then going forward throughout the US session over here is pretty much quiet as well. We do have a balance of trade data for US, but that's for September. It's quite some time back, so it's a bit lagging. But we have a slew of Fed speak, i.e. Federal officials speaking between 10:15 Singapore time all the way to 11 p.m. Singapore time onwards, and stretching all the way to 2:30 a.m. Okay, so we see a series of Fed speak. So today will be a much more quieter day in terms of economic data release on top of the RBA, other than the RBA interest rate decision, followed by a slew of Fed speak later on. All right, so now let's take a look at the technical chart then. Okay, so let me hide my myself so that you can focus more on the chart. So let us start with the FX market first. All right, so without further ado, the FX market over here, right, what we could see just now, I shared with you all that chart. Okay, so this is the 5-day rolling chart on the dollar versus the rest of the major currency, including in the CNH as well. So we could see over here is that the dollar starts to see a bit of retracement of that recent dollar weakness that was seen around in Thursday and Friday. So a bit of dollar retracement coming back into the picture, but nevertheless, it's actually the weakest against the Aussie, against the Kiwi. Okay, so due to the fact that why Aussie, because of the pricing of that potential interest rate hike by RBA later on, and also because the Aussie dollar and the Kiwi dollar, they tend to move in direct correlation. So those technical short-term technical traders who use correlation as their part of their trading strategy potentially could actually drive up the Kiwi strength against the dollar as well. So that's actually explain why at this moment in time, this is the 5-day rolling performance, 5-day, like I stress again, rolling performance of the dollar against the major traded currency. That explains why the dollar is the weakest against the Aussie and the Kiwi. Okay, so now with that, let's take a look at the Aussie dollar ahead of that 11:30 mark where RBA released their decision. Okay, so let me put up the Aussie dollar. So for sure, right, let's start to look at the Aussie dollar chart on a daily basis. Okay, so on a daily basis, right, we start to see that the Aussie dollar has started to shape that bullish breakout on last Thursday and Friday of this descending wedge bullish breakout, indicating to us that potentially we are now coming towards the tail end of this major downtrend that is in place since February 2021. And right now, potentially, it could start to shape a double bottoming formation. Then for sure, you want to see a what I call much more pronounced or major trend change to the upside. You got to break above the 69 figure level, which is close to the upper bound, the medium term swing high of 19th of June this year and 19th of July, and as well as this major descending trend line that is in place since 25th of February 2021 high. So that's 2 years back data. So for sure, this is a key major breakout point for us to actually have more concrete evidence that the Aussie dollar has started to shape a major trend change to the upside. Okay, so now in the short term, right, yesterday we are looking for that potential pullback because this push up, like I say, in terms of technical analysis, we're also able to zoom down to the lower time frame chart to spot for what I call overextended decline or overextended up move, where we could potentially look for short-term pullback opportunity on the hourly chart. So this is the daily chart. So if you zoom down to the hourly chart over here on the Australia dollar, the Aussie dollar, which I highlighted yesterday. So yesterday we are looking for a potential pullback towards this 65.20 level mark over here. So at this point in time, right, this pullback has really taken shape at this point in time, but it seems to us that it still remains in motion as the RSI hasn't hit the oversold region yet. Okay, after yesterday is extend towards the oversold region, overbought region, and also break down below this ascending trend line support level, then now turns into a pullback resistance. All right, so what you could see over here, this is like a momentum bearish breakdown. So IE hasn't hit the oversold region yet, so potentially, right, as long as 65.20 short-term pivotal resistance holds ahead of the RBA release of decision, in between it could start to still, that means after the release and slightly a few seconds, we call it hours after the release, it could still potentially shape that kind of residual push down towards this 64.45/64.20 support level that we highlighted yesterday. So still maintaining that short-term bearish bias for this pullback towards the 64.20. Then maximum for sure will be the close to the 50-day moving average and the 20-day moving average as well, coming to as a support level at 63.95. So still maintaining that short-term bearish bias for that potential pullback in the Aussie dollar below 65.20 key short-term pivotal resistance. But however, later we start to see a hourly close and a clearance above 65.20, then this impulsive up move shall resume to test the next resistance at 65.95, which is also confluence with the 20-day moving average as well, and as well as this bunch of minor congestion zone over here from 28th of June to 11th of August. Okay, so that's for the short-term technical outlook on the Aussie dollar. So moving on, next will be the dollar yen. So dollar yen, yesterday we are looking for that potential, we call it a snapback rally after last Friday push down. So this snapback rally has already almost retraced coming close to the 8.2% retracement of this minor down move that is in place since last Wednesday all the way to Friday's low. So no change. I'll be still using close to 50% retracement, which is the last Thursday's swing high area and last Thursday's swing high area. Also close to the exposed FOMC meeting on last Thursday as well at 150.60. So as long as 150.60 key short-term pivotal resistance holds, potentially we are still maintaining that short-term bearish bias on the dollar yen, heading towards the next intermediate support level at 148.90. So 148.90 is pretty key. Why? Because it's a medium minor swing low area of 17th of October and the 30th of October, and with the 50-day moving average coming to as a support in a couple of days at 148.90 as well. So a break below 148.90 exposes the next support level, which is the swing low of 5th October and 10th October at 148.25. Okay. However, if we start to see an hourly close with a clearance above 150.60, then this short-term bearish bias will be invalidated to see a squeeze up to retest the major resistance at 151.95. So a recap wise, 151.95, if you go to the daily chart, is the major swing high of last year 21st of October, where BOJ actually did that physical intervention, not verbal, to actually under the instruction of the Ministry of Finance to actually sell dollar and buy yen during that point in time. Okay, so that's for the outlook, short-term outlook of the dollar yen. So now let's moving on to the European currency on the sterling dollar. So the sterling dollar yesterday, we do have a bearish bias below 124.40, looking for a potential push down towards the first support level at 123.35, whereas in mid slash 122.85, the second support level, which is the 50-day moving average. So right now, right, with the RSI still after that bearish divergence that was highlighted yesterday, now it starts to work out its overbought condition, and now inching towards the oversold level that is yet to be met. So a bit of push down more towards 122.85. But given that the reward risk ratio is not so much attractive, so I'll be looking the sterling dollar as an approach very close to this 122.85 level. I'll be using the 122.25 as my key short-term pivotal support for today. So it's looking to actually this weakness to turn into a bullish bias, all right, because we foresee that the medium-term outlook on the sterling dollar still remains rather positive after the bullish breakout of this medium-term descending channel resistance that was in place since 14th of July, that was actually taken out on last Thursday and Friday. So we'll be looking for any pullback over here, residual pullback to flip back into a bullish bias, holding above 122.25, which is also confluence with the 20-day moving average. Then thereafter, looking for a push up to retest 124.40 in first step, then followed by 125.10, which is this congestion zone over here for that next resistance to potentially come into play. But however, if we start to see a breakdown, means an hourly close in today's session below 122.25, then this particular we call it potential anticipated bullish medium-term outlook on the sterling dollar will be in jeopardy when you start to see a choppy down move again to retest last Thursday swing low area at 120.70 / 120.80 level. Okay, this region over here for further weakness on the sterling dollar. Okay, so flipping to a bullish bias today, in any potential weakness heading towards the 122.25 key short-term pivotal support level on the sterling dollar. Now, euro dollar. So euro dollar yesterday we do have a neutral bias given the fact that price action start to be rather in sideways configuration. Yes, it start to inch downwards, and now heading very close to the lower neutrality limit that means the lower side, the lower part of that sideways range, the expected range that we highlighted yesterday. So give or take, with the RSI now also approaching very close to the oversold region as well. So a bit of move more to go. So heading closer towards the 106.70 level. So I'll be using the 106.70 level as my key short-term pivotal support for today. Flipping to a short-term bullish bias, looking thereafter for a retest on the intermediate resistance at 1.0765. So just to keep recap, what's 1.0765 is in fact the minor congestion area over here from the high of from the low of 25th of August being rejected by the swing of 12th of September, and as well as the 38.2 Fibo retracement of the last recent medium, we call it a medium-term decline from July high all the way to October low. Okay, however, but if you start to see an hourly close below 1.0670, then this short-term bullish bias will be invalidated to see a choppy down move to retest the support level at 1.059, followed by the minor swing low area of 27 October and 1st of November at 1.0520. Okay, so that's the outlook on the FX market in short term. So now moving on, next will be the broad-based stock indices. So going forward, the stock indices over here, let me touch on the Hong Kong index first. So the Hong Kong index over here right now is actually shaping that pullback. So we'll be using that 17,600 level as my key short-term pivotal support for today, which is so we call it confluence with this minor congestion area over here. Previously was a kind of support broken, turns into a resistance on last Monday, then shaped that bullish breakout and clear above the 20-day MA and the 50-day MA. So this is an hourly chart. So what you do over in TradingView, I'd like to reiterate that you are able to actually plot a higher time frame moving average chart on a shorter time frame chart to do multi-time frame analysis on a shorter term chart instead of flipping between daily and the hourly chart. Okay, so it saves us a bit of time. Yeah, so I'll be using 17,600 level as my key short-term pivotal support for today to maintain that bullish bias that we have earlier on the Hong Kong 33 index. Also 17,600 also confluence with the 20-day moving average as well. And if we were to do the Fibo retracement, taking the last push up from the low of last Wednesday all the way up to yesterday's high, it also confluence with the 38.2% Fibo retracement very closely as well. So 17,600 key level to watch in order for the bulls to maintain their composure, looking for at least a retest in short term, the minor swing high area of 12th of October and 15th of September acting as a intermediate resistance at 18,350. But however, if we start to see an hourly close below 17,600, then potentially we could see another round of choppy down move to at least in first step test the next near intermediate support level at 17,190, then followed by the key medium-term support at 16,980 / 16,800 on the Hong Kong 33. Now moving on will be the German 30 index. So for the German 30 index over here, yesterday we do have a bearish bias. Why? Because of that bearish divergence that's being seen on the RSI that start to flash out on the hourly chart. So what you see yesterday move is that on the RSI, after this bearish divergence at the overbought level, it starts to shape that momentum breakdown as well by breaking below this parallel ascending trendline support level and has yet to hit the oversold region. So potentially we could start to see maybe further downside being translated to the price action. So yesterday we do have a short-term pivotal resistance at 15,410. So we have a tighter key short-term pivotal resistance right now, given the emergence of much more negative elements that is depicted on the hourly RSI. 15,280 will be my Titan key short-term pivotal resistance for today. looking for a test at 15,090, a break below 15,090 potentially could take us down lower towards the next support level at 14,920. But however, if we start to see a break up with hourly close above 15,280, then this short-term bearish bias move will be negated to see a squeeze up to retest the medium-term resistance at 15,410, which is also the upper limit of this descending channel that is in place since the high of 29th of July this year. So still maintaining that short-term bearish outlook on the German 30 index with a tightened key short-term pivotal resistance for today. Okay, now for the US stock indices, yesterday we do have a neutral bias on the Wall Street 30 index, which is the Dow Jones Industrial Average. So what we could see over here is that we are neutral between 34,300 and 33,885. Yes, price action indeed try to trade sideways between these two key levels that we highlighted yesterday. But what we could see over here is that we also start to see a momentum bearish breakdown after the appearance of that bearish divergence on the hourly RSI. So given this new emerging negative element on the RSI, I will be flipping to a bearish bias for today. 34,300 for sure is still a key short-term pivotal resistance level to watch. I don't want to tie it so tight to yesterday's high, just in case of any whipsaw. And what is this 34,300? Congestion area over here for sure, previous swing low broken turns into a pullback resistance, and as well as the upper limit of this medium-term descending channel that is still in place since 1st of August high this year. So all in all, 33,885, a breakdown below this level, which is also confluence with the 200-day moving average, potentially should see the next support level being exposed at 32,560 / 32,390, which also confluence with the 20-day moving average that is coming to act as a support right now, and taking into account of the Fibo retracement, is close to the 38.2% Fibo retracement of last week's push up in price action on the Dow Jones Industrial Average or the US Wall Street 30 we call in our platform. But however, hourly close above 34,300, then this short-term bearish bias outlook will be invalidated to see a squeeze up towards the next resistance level at 35,020, pardon me, which confluence with the minor range stop of 30th of August and 15th of September this year. Okay, so that's the outlook for the US Wall Street 30. So as for the Nasdaq 100. So if you look at the Nasdaq 100 over here, what we could see is still pretty much in a tight trading range at this point in time. Also, if I were to look at the RSI by linking the start of this swing low over here to here, it seems to us that it's still trying to play around at this support level. There's no clear break yet at this point in time. So are we still having a neutral bias on the Nasdaq 100 with the definitely for sure these are the two key levels, 15,225 and 14,970. So unless we have an hourly close later on below 14,970, then potentially we could see a further slide in first step to retest the 20-day moving average, now acting as a support at 14,780. Also confluence with the former minor swing high of 25th of October, and 20th of October now turns into a pullback support level. So that's for the Nasdaq 100. So now moving on, let's take a look at, very interestingly, the chart of gold. So for gold over here, that's commodities. Okay, one second. Let me open up the chart of gold. Yeah, this is gold. So gold right now is still okay. Now it's actually attempting to break below the 1974 short-term pivotal support level that we highlighted. So right now we are waiting for an hourly close. If we start to see an hourly close below 1974 level, that means what we could see over here is the start of a potential we call it a minor corrective pullback to retrace this prior short-term uptrend phase from the low of 6th of October all the way up to the high of 31st of October, this region here. So what we could see over here is that if we start the hourly close below 1974, then potentially we could see deep budge lower towards 1932 / 1920, which is also the 20-day moving average acting as a support and the 50-day moving average acting as a support as well. And if I were to do the Fibo retracement, taking from the lows of 6th of October all the way to the high over here, is also confluence with the 38.2% Fibo retracement. So right now over here, given the fact that price action is piercing below 1974, so that initial bullish bias that we have yesterday, or in fact since late last week, since the whole of last week, has been more or less been negated. So we'll be now more or less looking for flipping to a bearish bias instead. If the gold chart itself, the XAU/USD, managed to have an hourly, in fact, it already have an hourly close below it. Pardon me, because it have an hourly close below it already. So for sure, I'll be flipping to a bearish bias right now, because it really has an hourly close below this level. So yes, so then I wouldn't want to use the level be so tight, right? At this point in time. So what we could do over here is at 2006. Okay, so what we could see over here is that we have the short-term pivotal level to be slightly higher, above 19,754. So this level has been taken out. So if I were to, let me draw the line again. Okay, so I'll be using this level here, the clean line. Okay, this region here. Okay, so this is yesterday's swing high. So this level here, 1989. Okay, will be my short-term pivotal resistance for today to flip to a bearish outlook, potentially for this ongoing minor corrective decline to take shape towards the next support level at 1932/1920 before another leg of potential recovery takes shapes, all right, on the gold XAU. Okay, but for sure, if we start to see an hourly break above 19,089, then we will start to be in a very choppy formation again, at least a retest at the range resistance that is in place since last 2 weeks ago, or I would say about, yeah, a week and a half ago at 2006. Okay, so that's the outlook for gold. So with that in mind, yeah, we'll come to the 32-minute mark over here. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.